Ladies and gentlemen, when you become the third speaker of a session, you have a challenge because the first two speakers have spoken a lot of things about your subject, and you need to find something else, and you have to remain within the same theme of the session. And also, in addition to being the third speaker of the session, I'm having another great challenge because I'm the last speaker of the day. And budget is being presented, and your mind is about to shut down. And but apart from that, I'm having a silver lining there because when it comes to the end of the day, you know that our level of enthusiasm rises because just one more speaker to go. So taking that challenge and the benefit, so let me present you what I call as environmental management accounting. First up, ladies and gentlemen, let me show this to you. This is a kind of a fabric cut-off of a garment. So this we have seen, this waste, and we have seen this. So this is what. But if you look at the other side of this, it's money. So it's dollars, it's rupees. So this makes sense for us. So that when we see waste, we take it for granted. But when we see the real financial value of that, we become serious. So this is what Chulendra was trying to, this is what Rathika was trying to suggest you. What gets measured gets done. So I would go on to say what gets measured financially would get done really well. So that objective of my presentation is to provide kind of management accounting response to what Rathika was trying to mention. Then again, trying to conceptualize what Chulendra was talking about. So ladies and gentlemen, let me present you this novel concept called environmental management accounting. So this is the response of management accounting, this so-called management accounting challenge. Or I would say it's the opportunity sometimes. So this subject or this particular discipline is evolving, it's emerging, and therefore you don't have specific boundaries of any definitions, any specific definitions. But everyone agrees that this is environmental management accounting, or EMA, is the connection between your environmental strategy one side and your internal reporting the other hand. So it connects your environmental strategy with your management reporting. Then if I move on to say a kind of an explanation on environmental management accounting, so it is the identification, the collection, the analysis and the use. So this is what we usually do in accounting. So analysis and the use of two types of information: physical information on energy, the physical information on waste, water, material, or even carbon. Then again, monetary information on environmental cost savings, benefits, and so forth for the users. When this definition was first given in 2001, it went on to say that you provide information for the internal management. But the boundaries of traditional management accounting have changed because we have integrated reporting, GRI, so that management accountants now increasingly engage in providing information for different stakeholders. So that's why I say this is for, you provide information for the users. Then from that we can identify that EMA provides two types of information. One is monetary information expressed in, physical information expressed in physical units, can be kilograms, can be liters, can be meters. Then we have monetary information expressed in monetary units. So this is where you have monetary EMF, and this is where you have physical EMF. Now let me put this into practical perspective. As a part of reducing the carbon footprint of your organization, you might consider to install a solar panel. Then you can't do this without proper evaluation. So you make the investment, and thereafter you want to ensure whether this investment really pays you off. So that you start recording energy data, you get your solar panel readings, so that you get physical EMA information that to support your environmental strategy. So this is how EMA supports, this accounting information supports your environmental strategy, your environmental management. Also, when you look at the dimensions of EMA information, you can identify three types. So it provides you past or future information. It provides you information for long-term and short-term decision making. and it provides you ad hoc or routine information. So by combining these three dimensions with the physical and monetary information, we can identify a comprehensive framework for EMA, where you have 16 quadrants. So this means you have plenty of techniques, plenty of EMA techniques. And these are some of these EMA techniques. You have accounting for energy, carbon accounting, accounting for water, then environmental capital budgeting, environmental activity-based costing, life cycle analysis. Then again, you have sustainability balance scorecard. So many techniques. So these are the general management accounting techniques which have been adopted in this context of environmental management accounting. So this is not rocket science, and this is not something alien. This is something we are used to. So let me move on to the framework once again. When you install the solar panel system, or when you change your air conditioning system, you will do the payback. So that is monetary EMA information, and that is future-oriented, and that is used for long-term planning, and that is ad hoc because you don't do the payback calculation every day. Then when you get the solar meter readings every day on a routine basis, that is a physical EMA, and that is initially will have a short-term focus, and that is routinely generated. Also, if you calculate the carbon footprint or energy footprint, so that is physical EMA, past-oriented, and that can be used for short-term and long-term information. So likewise, as accountants, we have so many techniques here which we can use in environmental management. Then if I put EMA in the practical context, EMA is not another environmental management accounting tool. So it is a broad set of accounting techniques and principles which will provide the necessary information to support your environmental management or environmental actions. So I'm using accounting in a broad sense because you can do accounting in physical terms and you can do accounting in monetary terms. Also, you have wide array of accounting practices which are being developed day by day. So new practices are being developed because this is an evolving field. And also, if you look at how EMA develops in an organization, I would say it is a gradual process from compliance to realization to integration. So this initially, you will start complying with external regulations. Then you will start complying with your internal standards. And when you start following these practices, at a point of time, you realize that there is cost-saving potential. And that is where you understand the business case of sustainability, and that's what Philin mentioned. So once you realize that, you become more vigorous in your approach, and then you propel yourself into the next stage of development, that is environmental integration. So this is where the environmental information or environmental management becomes a part of everyone's daily management actions. And you have, this is a part of your organization culture. And based on that, you can generate competitive advantage. And if you look at how you can develop, how you can move from compliance to integration, I would say it is a drift. It's a drift. So initially in the compliance stage, you will be focusing on few environmental domains, and that is what Rethink mentioned as the levers. You will be focusing on energy, something important to you. We will be focusing on waste, if that is important to you. And to support that, you will get the support of few key stakeholders, maybe your employees. And then to support that, you will develop few accounting practices, accounting for waste and accounting for energy, something like that. Then, when you follow these practices vigorously, you will go into integration phase where you will have comprehensive coverage of environmental levers or environmental domains, so that you will be focusing on energy, you will be focusing on material, greenhouse gases, or even biodiversity. Then to support this, you will get a wide array of stakeholders. All the material stakeholders will be important, and we saw how Puma has gone into the supply chain and how they have integrated the suppliers into their environmental management initiatives. Also, in this case, to support these different environmental programs or actions, you will develop accounting. You will develop different accounting tools and techniques. And you will have environmental KPIs, and you measure the performance based on these environmental KPIs. That's what you mentioned, Chulendra. So this is how you can integrate into how you can move into integration phase. Also, you can see there is an arrow, so that shows the potential for development, because environmental challenges keep on changing, so that we have to keep on improving. And also you can see it is the vision that drives your organization from compliance to realization to integration. So that I would say it is a journey. It's a journey, and it's a journey of unremitting commitment. And if I go on to explain what is sustainability management accounting, so that is when you integrate the social side of sustainability into an environmental management accounting. And we saw how Ambuja has done this, and we saw how they have integrated environmental value and how they have integrated social value to what they call as true value. However, social side of sustainability or social accounting is, I would say, the least developed, because it's intangible, culture-based, qualitative, and we still have lack of consensus on what is social and how to measure them. Then if this is the need of the hour, then how can the suppliers of accounting profession, that is the universities or the professional accounting bodies, can respond to this much needed sustainability of accounting or sustainability accounting education? So at present, when you look at, so most of these sustainability accounting skills and the knowledge actually come from external training of in-house training. So that means the universities and the professional accounting bodies, the suppliers of accounting profession, have not necessarily integrated sustainability education into their curricula. And this is actually a research finding in Australia, but I think this is well applicable in the Sri Lankan context as well. And we all belong to that category of accountants who do not have formal training on sustainability accounting, but we practice that. So that's where the universities and the professional accounting bodies should be proactive, and they have to integrate or incorporate sustainability accounting into their curricula. And there are new workplace demands. So we have chief sustainability officers coming up, then heads of sustainability, then again stakeholder engagement officers, new positions which we never heard of in the past. So that the professional accounting bodies and the universities will have to cater to this. But when you do this, there is a challenge. The challenge is sustainability accounting is not simply accounting. So it is not it's not engineering, it's not physical science, it is everything. So it's everything. So that is why sustainability accounting calls for transdisciplinary approach to education. So that is why the engineers should know accounting and the accountants should know engineering. And I'm sure that your experiences at JKH should vouch for this, and he himself is a good example of being an accountant from physical science. Then the issue is how we can do this. Professional accounting bodies or the universities, how we can do this. So let me share with you a few experiences as a university lecturer and as an accountant who have introduced sustainability into an accounting degree program. So at University of Sri Jayewardenepura, we have, at the Department of Accounting, we have introduced sustainability management accounting as a separate course unit, and also we have sustainability reporting aspects. The objective of these course units is, our objective is not to offer these course units in the long run. The reason is, we don't want to teach these subjects apart from the mainstream management accounting or financial reporting. And we believe that we would like to see how these things are embedded into a mainstream management accounting or financial accounting, so that every accountant will be familiar with these concepts. So this is not something alien to you then. Also, our students work in different projects to understand this transdisciplinary nature of sustainability. They work with engineers, they work with architects, they work with the production managers to understand this nature of sustainability accounting. And these are a few examples. This is going into a mining company to understand how industrial accidents have taken place, especially due to the performance measurement system. Then going into a recycler to understand the challenges they have in terms of recycling. Then going up all the way up to the rooftop to see the water tanks and again how the air conditioning outdoor units are working. Then going into solar park to understand how accounting for energy takes place there. Then this is inspecting or examining the source documents captured in the hands of the accountants to understand how the accounting takes place, at the bottom level. Also going into a sewage treatment plant, and these are all the students are all their future accountants. They're future accountants and going into unorthodox places to understand accounting for environmental management. And the biggest experience I have is when you work with engineers, the architects, or different professionals of different backgrounds, you break your accounting silos, you break your finance silos. And more importantly, you change your attitudes. I think that's really, really important for the accountants. So with that, I'm coming to the end of my presentation. So what I did was to provide a kind of a management accounting response to what sustainability accounting is. And you can rethink and revive the role of accounting in the future. So as I said, sustainability is a journey. So it's a journey with a lot of adventure because you don't know where your destination is. Sometimes it is the journey that teaches you a lot about your destination. Thank you.
Noam, coming to you, how do you establish the consensus in what Yulenda just said? This is what sustainability means to John Keels. So how do you maintain that sort of consensus across the board? This is what sustainability means to all of us. Again, do we go back to that subjectivity problem we talked about a few minutes ago? Or is it necessary to come to some sort of consistency and consensus? Or can you just function independently?
I think, yeah, definitely you need some consensus. Otherwise, these measurements or the reporting will not take off. Yes, it takes time. But with external assurance and all, you can do that. But I would say that initially we will be a little subjective, but that's all right. The systems will develop, and now we measure carbon footprint, which we never thought of that was possible some time back, and we do that. So in the long run, I think the systems will develop, and what's needed is to capture them initially somehow, and later the assurance and the systems will develop, and it will make sure that they're reliable and there is consistency across the board.
And how soon do you think that these studies will become mainstream? I know that's your dream, but how soon do you think that's achievable?
I don't know. But I think soon they should become the mainstream subjects, and we feel that. So that is why we have a separate session on sustainability accounting, and we need to see that whether we have really incorporated this much necessary accounting into our curricula. It's a call, I think. It's a call from the institute or the professional accounting bodies, and you can do that. We have done it, and yes, you can do it.
Thank you very much, gentlemen, for that entertaining and interesting discussion on sustainability accounting, something I'm sure which you will all be hearing a lot more of in the future. And to give you your tokens of appreciation for your time and presence here, I'd like to call upon Mr. Nandika Buddhipala, please, the chairman of the National Conference Technical Committee, to thank you, gentlemen. Thank you very much once again, gentlemen, for that sustainability in accounting session.